After Synopsys reported its latest quarterly financial results, the stock price sank in response to the announcement. Investors want to know what's going on with Synopsys stock, why did the stock price crash, and what's a fair value to pay for this business. I'll share with you some of the details I discovered after evaluating the latest results from the company. I'll share with you what management had to say about the company's latest performance, and I'll reveal my fair value calculation for Synopsys stock using my discounted cash flow valuation model to calculate what I believe is a fair value to pay for this stock. Right, so Synopsys management team said that the third quarter was a very busy quarter for us. We reported our second quarter number on May 28th, and on May 29th, we got a BIS restriction that hindered our ability to sell into China. Of course, Synopsys is not the only company facing restrictions for sales into China and volatile restrictions, approvals, and then restrictions again. This is happening to many companies, including NVIDIA and AMD. So that restriction lasted for about 6 weeks, and they closed the transformative acquisition within the quarter, and there was a very short stub period that we needed to account for inside the quarter of roughly about 2 weeks. Then when the BIS restriction was lifted, it didn't mean that the customers in China quickly got back into normal purchases. There's a lot of uncertainty in China from semiconductor companies or system companies designing or needing IP to design chips that change the rhythm of selling. And that's also happened with NVIDIA and AMD. Just because they got approval or they got signs from the US government that they can go ahead and sell their chips back into China again, it doesn't mean that sales quickly restarted in China. In fact, they're still struggling to make sales into China. So it's not just a one-sided situation where as soon as the United States allows Synopsys to make the sales to China, all of a sudden sales start rebounding. No, because the sales were disrupted to begin with, the customers in China started to make other plans and looking for other options, and they don't want to rely on US companies anymore because they understand the volatility of the relationship between the US and China. And so they don't want to play this game anymore. They don't want to play the game of politics where they can, then they can't, then they can. And so they're looking for more permanent solutions and not relying on the governments to be friendly and allow sales to happen again within countries. Click the link below to watch the full video.